can't see me yet, but you can certainly hear my voice. What's going on, guys? Just joking. VanEck here for SerpentX Tech. Welcome to another episode of Caffeine Crypto, where I welcome you to join me with a caffeinated beverage of your choice. If you drink caffeine, if you don't, water's fine, or whatever you prefer. You know, coffee, tea, but I like energy drinks and coffee, so I'm gonna stick with that. Got me some Doge Lord coffee right here. Make sure to check them out. But we also need our crypto, our dose of crypto. So I'm just gonna get right into it, regardless, and see how things go. So right now, as you can see, the market is pretty good. So it's green. It's green. That's a positive, right? Considering we've been like what, stagnant and moving sideways for a hot minute. So can't complain. Things are looking pretty good. You know, we got up to the 48K area. We knew that was going to be a key resistance level. Got pushed back down. Drop back down to 44, back up to 46. So now, you know, will we move sideways and then get that nice little rally to push us through the resistance up into the 50Ks? Well, to be determined. We'll have to see how things pan out. I will say on the daily, right, we got the 50 about to cross the 100, which is usually a bullish or good indicator. So we'll see how things pan out. I'm not a TA expert. There's plenty of other channels that do that. I just know how to read some charts and be logical. That's all I can say. So, everybody was ranting and raving about this week. The EU Parliament passes privacy-busting crypto rules despite industry criticism. Say that 5 times fast. So European Union lawmakers voted today in favor of controversial measures to outlaw anonymous crypto transactions and move the industry said would stifle innovation and invade privacy. Of course, our governments do what governments do. They want to know everything about everything. So more than 90 lawmakers voted in favor of the proposal, according to documents seen by CoinDesk. The proposal are intended to extend anti-money laundering requirements that apply to conventional payments over 1,000 euros or the equivalent of $1,114 to the crypto sector. And that's at time of writing. Obviously, it depends on the euro to USD comparison. Fiat money. They also scrapped the floor for crypto payments. So payers and recipients, even the smallest crypto transactions, will need to be identified, including for transactions with unhosted or self-custodial wallets. Further measures under discussion could see unregulated crypto exchanges cut off from the conventional financial systems. I'll get into my thoughts here in a minute, but moving on, national government said in December they wanted to scrap the $1,000 threshold for crypto on the basis that digital payments can easily circumvent the limit, and to include private wallets that aren't operated by regulated crypto asset providers. Members of the center-right? I heard of the left and I heard of the right, but center-right? Okay, maybe they do things differently there. Let me know if you're from the EU. Members of the center-right European People's Party, then again, I'm not a politician, EPP, oppose many of the more controversial changes, condemning what they called a de facto ban on self-hosted wallets. Such proposals are neither warranted nor proportionate. EPP economic spokesperson Marcus Ferber said in an email statement Thursday, with this approach of regulating new technologies, the European Union will fall further behind other, more open-minded jurisdictions. A separate legal proposal, as discussed today, would stop transfers being made to non-compliant crypto service providers, which include those operating in the EU without authorization or that are not affiliated to or established in any jurisdiction. The Thursday vote came in spite of objections from major industry participants, such as Coinbase, and from legal experts who warned that overly heavy-handed privacy violations could face legal challenges in EU courts. Now, we know the EU has been pushing really hard on like Facebook and other enterprises to, you know, how important privacy is. Privacy is definitely important, but now you're trying to push your way into everybody's lives, into what they do, how they spend their money, where they spend their money, why they spend their money. Like you're really getting a look. So you want to protect the person's privacy with Facebook, but then you want to know how they spend their money. Like $1,000 is not a lot. 1,000 euros is not a lot. So that's going to be a lot of reporting, a lot of information out there. So under the new rules, Coinbase will have to report to the authorities anytime a customer received over 1,000 euros from a self-hosted wallet. The exchange CEO Brian Armstrong warned in a tweet posted Wednesday. The plans must be agreed on both the Parliament and national ministers who meet in the EU Council in order to pass into law. So it's still a work in progress, but that's not very good in my opinion. I think that's a little bit too much. Yes, regulation is needed in the crypto industry. Is this the type of regulation we need? No. Again, older systems, older rules, older regulations need to be updated for the modern times. And so, just like the EU, the US is doing stupid stuff. SEC proposes new crypto rules for exchanges to protect users from hacks. Now, I understand this, right? So one of the biggest questions I get from some of my colleagues in the space, and I'll get to everybody in just a second. I just want to go over these two main topics because this is the biggest part of my stream, is a lot of my friends will ask me, is Celsius, is Coinbase, is this exchange, that exchange, FTX, are they FDIC insured? If something happens, will I get my money back? From my understanding, and I could be wrong because it could have been updated, they are not. But they have systems in place that if they do get hacked, clients' funds are compromised, I guess to a certain extent, like how much, right? Like if you're a billionaire and you got billions in Coinbase or whatever, and they get hacked, you're not going to get those billions back like that. But for smaller asset managers or individuals, at-home end users, yes, you would somehow recoup those funds. The problem is how you get those funds, right? You may have got, you may have 0.5 Bitcoin, and then you may get that 0.5 Bitcoin over time, but the valuation of that Bitcoin versus, it was $50,000 when I had it, I lost it, and then by the time I was paid back my full 0.5, Bitcoin was only at $3,000. So that's the underlying, there's nothing we can do. But the SEC is trying to push for these services / exchanges, to put things in place, right? So the Securities and Exchange Commission is outlining new cryptocurrency accounting standards that would protect crypto assets held by companies for users against hacking losses. This move comes as more trading platforms allow users to deal in cryptos and hacks continue to occur. Actually, hacks are getting more and more, and we got a more recent one coming later in the show. In a new accounting bulletin published Thursday, the SEC said there is risk with safeguarding crypto assets, and noted in the crypto assets change hands and prices very quickly, making them different to protect than more traditional financial assets. The SEC also noted that there are far fewer regulatory requirements for exchanges or companies holding the crypto assets on behalf of the users, and that they may not be complying properly with the regulations, increasing risk to investors. These entities and or their agents may safeguard the platform's user crypto asset and also maintain the cryptographic key information necessary to access the crypto asset. The obligations associated with these arrangements involve unique risk and uncertainties not present in the arrangement to safeguard assets that are not crypto assets, including technological, legal, and regulatory risk and uncertainty. So all the fine print that you normally see with a traditional financial institution is not really in place by a exchange service or whatever it may be. But again, you're trying to apply old rules to new tech. It's not going to work that way. The SEC advised that an exchange or company holding a cryptographic key information for a user or users' crypto assets should account for those as a liability as far as at fair value of the crypto assets on their balance sheet, and warn investors of the risk of safeguarding those assets. Financial statements should include clear disclosure of the nature and the amount of the crypto assets that exchange is responsible for holding for the users, with separate disclosures for each crypto asset, Ethereum, Bitcoin, whatever coin, Cardano, whatever it may be, and the vulnerabilities that the exchange has. Periodic reports would need to be filed to the SEC. The new rules will apply to all public companies registered with the SEC starting June 5th, which is not too far away. We just got into April, May, June. These risks have significant impact on the entity's operations and financial condition, the SEC noted. The staff believes that the recognition, measurement, and disclosure guidance will enhance the information received by investors and other users of the financial statements about these risks, thereby assisting them in making investment and other capital allocation decisions, capital gains basically. So PayPal, Square, Robinhood, Coinbase are just a handful of companies that hold crypto on behalf of their users. As of the end of last year, Coinbase was storing about 278 billion in customer digital wallets at the end of 2021, representing approximately 11.5% of total market capitalization of crypto assets at that time. So 278 billion stored by Coinbase on behalf of its users or clients. That's quite a lot. 11.5% of total market cap. That's pretty good. The bulletin is further evidence that the commission needs to update its regulations concerning custody of digital assets. Paul Atkins, CEO of Potomac, I'm sorry if I mispronounced that, Global Partners, and the former SEC commissioner told Yahoo Finance. Instead of resorting to staff accounting bulletins to address custodial risk, the commission should update its custody rule to clarify how they apply to digital assets. The Chamber of Digital Commerce has called for crypto accounting standards for years. It is essential that business and investors in all types are able to clearly reflect the value of their assets on their balance sheets. Because that value fluctuates, that can be very hard not only for the end user, but for the crypto exchange service, whatever it may be. Obviously, this news was important. There was a number of different things that came out. In its guidance, the SEC said that the custody of digital assets on behalf of others has risk not present with other assets. Technological risk. There are risks with respect to both safeguarding of the asset and rapidly changing crypto assets in the market that are not present with other arrangements to safeguard assets for third parties. Legal risk. Due to unique characteristics of the assets and lack of legal precedents, there are significant legal questions surrounding how such arrangements would be treated in a court proceeding arising from an adverse event, fraud, loss, theft, bankruptcy. Regulatory risk, as compared to many common arrangements to safeguard assets for third parties, there are significantly fewer regulatory requirements for holding crypto assets for platforms, users, or entities may not be complying with the regulatory requirements that do apply, which result in increased risk to the investor and entities. Anyways, long story short, we got the EU locking down or trying to lock down private transactions. Anything above 1,000 needs to be reported by the crypto exchange. Now, if you were to send privacy coins from your wallet, your self-custodial wallet, to another self-custodial wallet, I assume that wouldn't have to be reported, but once you convert that into fiat, which you will have to use an exchange at some point in time unless you do OTC, that is going to need to be reported. Now, the whole point of a privacy coin is to, protect your privacy, and the EU is trying to pry on that. Will that set the precedence for the rest of the stage? Then we have the US saying that these type of exchanges and services need to have a number of measures in place, but they're focusing more on they're implementing or trying to implement these rules and regulations using old disclaimers, disclosures, regulatory practices that do not fit the technology that we have today. So again, as I've been saying for the longest time, we got to update things. We got to catch up here. Now, while one or two countries are trying to regulate it and causing some panic, obviously when the news hit, it did cause some panic, right? So we sold a little bit, we dipped down. I'm not sure if it was just because of that news. I doubt it. There's a number of other factors that come into play. But we also have other countries doing good things to try to embrace crypto. Now, of course, every country wants to make their own cryptocurrency. How things go. So I can't pronounce his name, but Kyrgyz, member of parliament, Karim Kajezi, sorry, sir, if I mispronounced that, or ma'am, called for legislation of the currency in the country during the Parliament's committee meeting on law and order and combating corruption. During his speech, the advocated for developing a legal framework for the crypto market and suggesting amendments to the draft law to incorporate virtual assets. He said nothing is growing as fast as crypto, which is certainly true. He added that their country is perfectly positioned to take advantage of the growing crypto popularity and suggests launching their own national currency, or CBDC, which is a bank-sponsored cryptocurrency. He said that the government should focus on developing a sovereign national digital currency overlooked by the national bank. He also advocated for building a crypto hub in the nation by onboarding highly qualified specialists in the field, a strategy followed by the likes of the UAE to become a regional hub for growing crypto market. The Central Asian nation has positioned itself as one of the crypto-friendly nations with significant progress in regulating the market. Bitcoin is considered a commodity and is allowed to be mined and transact under commodity laws. And of course, in that area, you had a lot of stuff like the Kyrgyzstan issue with power and stuff like that. So, some countries, El Salvador, and others are trying to embrace crypto. The U.S. and the EU are kind of taking like, all right, well, we're not going to ban it, right? Unlike some countries, but we're going to want to regulate it. We want a piece of that pie, and we want to know what you're doing with that pie. And that's great to a point. I understand reporting my taxes. I understand, reporting what I do to the government. I understand that. But, like, at a certain point, like, what's mine is mine. Why do I got to keep telling you, why do I got to tell you when I go to the bathroom which hand I use to wipe my butt? Like, stop digging into my life. You already got enough information that you can use off of Amazon, Facebook, all these other third parties that you've been trying to regulate as far as privacy. You can easily pull or subpoena that information to find out more about me, what I like, what I do, why I do it. And now you want to, like, you need more control over the money because the money is not in your banks. Like, that... You jelly, bro? You jelly? Anyways, yeah. So we're going to get on to some Ethereum news, Vitalik. But before we do, I just want to get into say good morning and hello. So Gandalf, I did look up that article, but I think it's an April Fool's joke. So earlier in the stream, they said, what's good, bro? Just seen an article about Tesla's acquiring the Ethereum Foundation. Not really sure what the heck that means, but maybe you can cover it today. I really think it's an April Fool's joke, just to be honest. First off, it's a Reddit post. Yeah, it was on April. It was on the 1st of April, and then if you look at the article, it doesn't look like an official statement, right? I mean, look, it's basically DNS.xyz blog. So this is not an official position. This I'm pretty sure is just an April Fool's joke. First off, if something major like this happened, we would hear it in a professional setting. When I looked at other crypto news, it was not found anywhere. It would be blowing up. Our feeds would be going nuts. It's definitely something that I would consider April Fool's. So not exactly true. But anyways, thank you. And thank you for always showing up and commenting on various videos. So Mr. Ponkira, excuse me. Buy the rumor, sell the news. Yeah. That's always good. What's up, Crypto McKell Raid? Thank you, guys. Appreciate you. Integra Guy. Hi, everyone. Magic Lucky. Dakota Miner. That one guy, Oz. I guess that's how you say it. Crypto Nico. What's up, Crypto McKell? I need to talk to you, by the way. Golden Wolf. Johannes. Josh A. Thank you, everybody, for hanging out. Sebs. Chaps. Oh, Vanita. Thank you for the 19.99. Really appreciate the donation to the channel. It's just going to go right back to you anyways. So, but I appreciate you nonetheless, Miss Serpent. Moving on. So, Vitalik. This guy. So, this, again, may fall under the April Fool's situation. Right? It may fall under the April Fool's situation. But let's take a look at it, right? So, Ethereum co-founder Vitalik Buterin published a blog post Friday that, with compelling logic and detail, defended Bitcoin maximalists. The post seems largely serious, though in its publication on April Fool's Day, it introduced all sorts of questions about his real intentions. The maximalist ethos broadly resists change to Bitcoin itself, while also arguing that more complex blockchain systems have an inherent or inevitable flaws, fatal flaws. Buterin praised the maximalist in shocking because Ethereum itself is the most consistent and high-profile large of maximalist criticism, substantially because of the fragility introduced by the complexity of the smart contract features. The more you build on something, right? So we got a skyscraper, and the more we build up, the more risk we have. If we don't properly secure that building as we build up, it can become more fragile, bringing the whole thing down. So Ethereum has a lot built on it. DeFi, dApps, smart contracts, so much stuff. And it's going to continue to be built upon, whereas Bitcoin is, may not have the fastest transactions, and may not have this. It is the most decentralized and doesn't have much features, but it's really becoming more of that main staple, that where most people want to put their money. Even if it's just a percentage of a Satoshi, they want to put their money there. Ethereum is something you dabble in to make money, make trades, stuff like that, play around on the bridge, whatever it may be. But Bitcoin is where it's becoming more of a store of value. Yes, it's volatile, but you can see that the Bitcoin, when you ask Bitcoin people, maximalists, if we upgraded this, would you be okay? No, is it like Bitcoin is perfect the way it is? Like, it doesn't matter if they're dating an ugly girl, they will always think that she's pretty because she's Bitcoin. Like, you cannot change their mind. So in this post, I'm sorry for that analogy. I really do. I don't know where I was going with that. I got nothing. Anyways, in this post, Buterin frequently seems to echo these critiques of the system he conceived, including taking shots at Ethereum proposals to print money for developers. He even rhetorically badmouths his own habit of meeting with business and political leaders with questionable morals. Some of these people are actively involved in serious human rights abuses that Vitalik certainly does not support, writes Vitalik. Does Vitalik not realize just how much some of these people are geopolitically at each other's throat? This is Vitalik writing this. While that's easy to interpret in some sort of ironic troll, what Buterin really seems to be doing here is leveraging the inherent ambiguity. Oh my God, I can't say it. Basically, use April Fools to write the publication, okay? All right? There. And it's highlighting the nuance and complexity of the debate over maximalism. His apparent attacks on Ethereum are best interpreted as making the case that the crypto ecosystem encompasses many different approaches, even when he ramps up to rhetoric for April Fools trolling purposes. He describes the team blockchain, implicitly including many Ethereum folks, as privileged people in wealthy countries who love the virtue signal about moving beyond money and capitalism, and who can't help being excited about decentralized government experimentation as a hobby. By contrast, he describes Team Bitcoin as a highly diverse group of both rich and poor people who are actually using the capital tool for free, self-sovereign money to provide real value to human beings today. So, is he, in some cases, you're reading this and you're like, is he being genuine or is he not? So, systemic effects are real, Buterin writes, and it is just not possible for a currency to enable an ecosystem for highly complex and risky decentralized applications without that complexity biting it back somehow. Bitcoin makes the safe choice. That safe choice, as Buterin spells it out, is to focus on just being money, instead of introducing secondary functions that could undermine Bitcoin's monetary position. Bitcoin just being money reduces pressure from core developers to keep adding features to keep up with the competition and serve developers' needs, he writes. He credits the toxicity of maximalism with pushing back on the continuing pressure to innovate and introduce new risk. As if, again, they want their ugly girlfriend to stay their ugly girlfriend. And it may be ugly to us, but they think it's beautiful. And the most beautiful thing ever. So Bitcoin maximalists will not want to change Bitcoin. And I understand. I'm not hating. And Buterin is saying, because of that mindset to not change Bitcoin, two things. It's a highly diverse group of both rich and poor who are actually using the capitalist tool of free sovereign money to provide real value to human beings today. I think that's a true statement for one. And then two, let's see here. The fact that if you continue to try to build on the platform, you increase its risk. Bitcoin is just being money. And that's true. It's just being money, a store of value, and people want to put their funds into it, right? Instead of putting your money in a 401k that you might lose, why not put it in Bitcoin? That's not financial advice. I'm just saying that. I'm just speaking out loud here. Instead of putting it in a 401k, right, or relying on Social Security that might not be around when we retire, why don't you put it in Bitcoin? And most of these articles are going to be in the description, by the way, if you want to read a little bit more. I didn't look at the full paper that Vitalik, or the full whatever that Vitalik wrote on April Fool's. Was he being serious? Was he being legit? I don't know. You guys weigh your thoughts on the situation. So I think Bitcoin being Bitcoin is perfect just the way it is. I'm not a maximalist, but I know the risk. Look at all the troubles that Ethereum's having as it continues to build up. So real quick, Bitcoin is on track to see the highest weekly close of 2022. This was written on the 27th, which is a few days ago. Obviously, we hit the 48K area, almost 49, pull back down, which is the highest weekly close in 2022. But we will see how things pan around. I mean, obviously, right now it looks like we're curling back up. We're about to flip the 50 over 100 on a daily. We'll see how things pan out in the long run. VanEck says Bitcoin could hit 4.8 million if it became a global reserve asset. Now, it's not saying it will become a global reserve asset. Actually, it's some testing that they did where they looked at gold and Bitcoin, and they did like some pricing and numbers and stuff like that. Let's see here. Bear with me 1 second. I didn't want to cough in your ears. American investment firm VanEck believes that Bitcoin has doubled the upside of gold and could be worth as much as 4.8 million per coin if it becomes a global reserve asset. That's a big if, of course. VanEck thinks that the Chinese yuan is more likely a contender. The lofty assessment for Bitcoin came Thursday's Insight piece written by VanEck's head of active EM debt, Eric Fine, and chief economist Natalie Gurushina, who attempted to compare the price implications of gold and Bitcoin if either were to be adopted as the backing for global currency regimes. VanEck's analysis found that the implied price of Bitcoin ranged from 1.3 million to 4.8 million. The lower prediction was based on Bitcoin as a monetary base, M0, which investment database Investopedia says includes all circulating supplies of currency and bank deposits, but is not a common marker for economists to look at. The analysts urge readers to bear in mind that the predictions are merely starting points for investors to formulate a framework for how to value gold, and Bitcoin in the extreme instances either becomes a global currency. It is noted that there are alternatives such as a finite real estate, infinite equities, even emerging market currencies that could serve function of gold or BTC. So just a what if scenario, if it became a global currency, what it could hit, 4.8 million if it did become that. Can you imagine one Bitcoin being that much money? What would you do? What would you do? Let me know in the comments down below. If you had one Bitcoin, 4.8 million, what's the first thing? I don't want to hear your whole list. Not that I don't like it. But what would you do? Let me know. Let's get some lights on for you guys. Let's see if that makes anything a little bit better. I'm using the GoPro light. We only got a few news topics here, so if you got any questions, concerns, comments, please post it in the live chat. This is pretty interesting to me. So 1 in 5 adults has invested or traded or used cryptocurrency, says a poll from NBC News. Basically, it's not a lot. It's not as much as I thought it would be. But anyways, who cares? You know, like honestly, I bet most of you wouldn't care that 1 in 5 adults have invested or traded or did something in cryptocurrency. But yeah, among the demographic groups studied, men between the ages of 18 and 49 years were the most apt to say they've dabbled in crypto at a rate of 50%. So 50% of men between the ages of 18 and 49, let's say 50, have dabbled in crypto, and only 19% of those polled by NBC News said that they view crypto positively, and 25% indicated that they view it in a negative light. So 75% see crypto in a positive light out of that age group, and 25% see it in a negative light. And there's arguments for both sides, right? I'm not going to go through this entire article, but again, most of them posted in the description. Going back here with the SEC situation, and you know, considering the crypto rules for exchanges and services as these number of hacks and attack vectors are being implemented to, you know, steal funds from users. Same time or same around the same time, we had this, the Axie Infinity 615 million crypto hack. What to know about the heist. So we're going to talk a little bit about this real quick. Let me get it in the description. So it's not bad that the SEC wants to make rules or regulations for these cryptocurrency exchanges / services to really, you know, have protections in place for its users, its end users, whatever it may be. But hackers have stolen cryptocurrency worth about $650 million from the blockchain project linked to its popular online game Axie Infinity. The latest cyber heist is to hit the digital asset sector. Ronin, a blockchain network that lets users transfer crypto in and out of the game, said on Tuesday that theft happened on March 23rd, but was not detected until almost a week later. So a week later from the 23rd would have been the 30th of March. Ronin is used in Axie Infinity, one of the world's most popular online games involving cryptocurrencies. It produces, or its products, include a digital wallet for storing crypto, a bridge that allows users to move funds in and out of the game, and this is where the crypto was stolen. So the bridge was the attack vector, and we use bridges all the time: Polygon, Ethereum, Binance, whatever. There's bridges for everything, right? Ronin takes its name from the samurai warriors, of course, that we know. The name represents our desire to take the destiny of our product into our hands, Axie Infinity said in a blog. Sky Mavis, which launched Axie Infinity in 2018, did not respond to multiple requests for comment. Ronin also did not return to Reuters. Jeffrey Zerlin, one of Axie Infinity's founders, said at a conference Tuesday, "It's one of the bigger hacks in history, and we're fully committed to the continued building." Now, a lot of news articles said that this hack will not discourage new users, will not discourage crypto from continuing to be this ever-changing landscape and ecosystem. And I agree with that. But what happened was that the Ronin hacker used stolen private keys, the passwords needed to access the crypto funds, after targeting computers connected to its network that helped confirm transactions. So that's an attack vector on Ronin itself, not so much the individual logging into the bridge and connecting their wallet. It was an attack on Ronin itself. Obviously, they're going to have to work to restore those funds to users, and they do say that they will. They will work to restore the funds to the users impacted. Now, this is why the SEC is doing what it's doing. What is the safeguards in place? So, if I lost $20 right now, how are you going to get that $20 back to me? Are you going to pay me over time? Because if you pay me over time, that crypto asset that you're paying me back in may not be valued the same. And that's the biggest thing when it comes to repayment. Like with the Nice hack, right? When Nice Hash was hacked, we all got our payments back. Not all of us. I just want to make that clear. Not everybody got paid back. But we got those payments over a wide period, and so the valuation of that cryptocurrency was not the same. The money that it could have been was not the same. Now, obviously, it's worth more because that happened a few years back, But that's something that like we need to understand. So the SEC is trying to get these crypto exchanges to do it through whatever legal channels that they have. I know some exchanges already do this, right? If you did lose funds, exchanges get hacked, the exchange will work to pay you back. That's why they have some like emergency fund or whatever set to the side. But are you going to pay me back in fiat or are you going to pay me back into crypto? Because I'd rather take the crypto, right? If I lose 0.1 ETH because of a hack, I don't want you to pay me back whatever you think, that ETH at that time was worth, $500 or something like that. Just theoretically, that 0.1 ETH was worth $500 at a time in a hack. You pay me back $500, but because the market went up, instead of getting 0.1 ETH, I now have 0.7 ETH. So I lost 0.3 ETH because of the duration of time in between the hack and payment. So it's kind of like you got to figure out, like, they got to work together with the government to not only update these rules and regulations, but make sure they fit the new tech, the new era, the new days, and determine if they're going to pay back in fiat or cryptocurrency. Would you prefer, like, if an exchange you were using got hacked and you lost whatever cryptocurrency it is, would you prefer to get paid in fiat or the actual cryptocurrency? Let me know in the comments down below or in the live chat. About ready to wrap this up, actually. We got 20 minutes left, and we're about ready to wrap this up. This article here, I'm not going to go too much about it. It says basically the 2 top cryptocurrencies to buy and hold forever. This is Fool.com. They often do a lot of stuff like this, and they say the 2 currencies to buy and hold forever are Cardano and Ripple? What the? Oh my God! Why? Why do people love Ripple so much? I hate Ripple. I don't know why I hate Ripple, but I hate Ripple. Oh, that's right, because it works directly with the banks. I'm sorry, I forgot. And maybe it's just me being me. All right, I have a different opinion. You have a different opinion. Nothing's wrong with Ripple. I just don't like cryptocurrencies that, like, as soon as they come out the gate, the first thing they want to do is work with the bank. The whole point of cryptocurrency and Bitcoin and Satoshi was to get away from the banks. Let's not go back to them. Let's not rely on them. Let's not become reliant on the U.S. government for everything. Some things. I'm taking out my trash. I was joking, by the way. Anyways, where is Ripple at? Where is Ripple? Ripple. There it is. So number 7. Yeah, I know. There's a lot of. There's some positives with Ripple. I just don't like Ripple. Call me an idiot, whatever you want to call me in the comments down below. I just don't like Ripple. Cardano, cool. I like it. I like Cardano. Been a supporter of Cardano for quite some time. There's some flaws for sure, but I certainly do like it. Let's talk about the upgrade. All right, this needs to be a little bit more interactive, guys. For those of the 40 of you that are watching, I need you to be more interactive. All right, so we're gonna have a little discussion here. Ethereum's major upgrade is coming. Should you be more bullish on it than Bitcoin? Now, this article doesn't really give us too much, right? Does not give us really too much. We already know about the Ethereum's major upgrade. It's expected to lower the blockchain's carbon footprint, improves efficiency, reduces supply, yada, yada, yada. It's months away. An exciting builds up, and Ether has outperformed Bitcoin over the past month, with the former gaining 23%, the latter advancing 15.7%. All right, cool, whatever. Gas fees still suck. Okay? Gas fees still suck. That's why my giveaway that I did for the 20K subscribers, I did it in Bitcoin, not Ethereum. Why? Because fees suck. So, do you, think that Ethereum's major upgrade not only is coming, we already know that. That's not the question. Do you think Ethereum is a smart investment right now? Right now, time of filming, if you're watching this the day of, do you think Ethereum is a smart investment or something that, I know miners are going to continue to mine it, but one, that you should invest in, and 2, that you should mine? And 2 parts. Will you, as a miner, continue to mine it until it's no longer mineable? Say that 5 times fast. Meanwhile, I'm going to look through some live chat, but I definitely want to hear your thoughts and opinions. Again, great. Thank you, man. Sorry. Just popped up and was busy with baseball and work yesterday. Yeah, I don't think Tesla's bought the Ethereum whatever foundation thing. Well, yeah, 2 of you left and you didn't answer the question. Come on now. I read the post yesterday. I felt like Vitalik was competing with Elon on trolling. So Elon and Vitalik, yeah, they're big trolls. I agree with your opinion on the 401k. Inflation is at 21% right now. I'm doing a Roth on iTrust Capital. Good job. Okay. It's okay to have your eggs in different baskets. I certainly respect that. I do the same thing, right? My eggs are in different basket. I have physical assets. I have a Roth, a 401k. I have crypto. I got this. I got that. You know, like, it's okay. Spread the love. One fails, you still got backups. Go solar and mine on it. I'm working on it, man. Working on it. I gotta get a roof first. Gotta get a new roof first. Pay off my family's bills. There you go. All right. So, all right. I see what's happening here. If you got that much money, one Bitcoin was worth 4.8 million. Bad Cat said go solar and mine on it. I'm not sure if that's what you're replying, but I know first time 13 said that they would pay off the family's bills. That's so kind of you. That's very good. For says if they have 1 Bitcoin, we'll hold it in a wallet tight at night and kiss it goodnight. I would be too scared to give it away. Borrow off its collateral. Alright. I meant 0.07 ETH. Thank you. Thank you, Full Electric. Yes. If I lost 0.1 Ethereum at the hack, and I only got 0.07 ETH back, I would be disappointed. I'd rather get my crypto back rather than my fiat. Thank you, Fully Electric. I was incorrect in my maths. Alright, Magic Lucky, Ripple. Why are you eyeing it? ADA, I get it. But Ripple, yeah. See, I don't understand it. Like, I'm not sure if you're agreeing with me. Like, what's your personal opinion? Is Ripple really something that we should be liking? I know there's a lot of people that like it. I understand that. I just... Like, it's the kid, all right, it's the kid on the first day of school, right, to get in with the teacher is like a super brown noser, a super kiss you know what, right? Like, I don't want to, like, get in like that. I'm cool. Like, Ripple comes out the gates, and they just want to go work with the banks. Like, the whole point of cryptocurrency, in my opinion, was to get power back into the people's hands, stop becoming reliant on the government, and become more decentralized instead of centralized. And Ripple just wants to make it work with the governments, and I think that's because that's where they're trying to capitalize on the big money. But is it working? Especially now that I think the suit's over, right? They're down to 7th. They were the top 3, top 5, somewhere like that. But anyways, I personally don't like Ripple. I'm not saying it's a bad investment. I just don't personally like Ripple. Maybe it's the coffee, Magic Lucky. I don't know why. Anyways, not more bullish on ETH when POS. Reason simple, whales. It would be like a seal they play with. Oh, I would be like a seal. Oh, I know what you mean, dude. Discovery Channel, killer whales, bro. They be hacky sacking seals, man. It's so sad. Funny, but sad. You know they gotta eat too. But yeah, I don't want to be a seal to a whale. I definitely do not. And I have a feeling that's actually one of the reasons why, I'm not sure if the volume's too loud. I don't like, so first off, the switch to proof of stake. Let's talk about that real quick. And thank you for a few of you that commented. For example, Fully Electric says, 100% do not feel ETH is something to invest. I have a few A10 Pro Plus, so I would keep mining until the end, but not investing anything more. Okay, all right. If you have 32 ETH to stake, then yes. As a miner, just to sell. Okay. So the validators that got the 32 ETH that will continue to stake and earn Ethereum, don't forget the amount of money that the amount of ETH they will earn is much less than what we've been making as miners, from my understanding. But I will get properly educated later this month. If you keep an eye on the channel, keep an eye on the Twitter, you'll find out more about that. Anyways, so we were talking about ETH, but I wanted to say something. Oh, was there a code freeze? Has there been a code freeze on Ethereum yet? Class? Anybody? No? Yes, you in the back. Has there been a code freeze? No? Good answer. There hasn't been a code freeze on Ethereum yet. And what did I say? So this whole preparation for the merge, if there's not a code freeze, they're not going to go through with the merge yet. So I think the merge is going to be delayed to August, September, maybe September, October, somewhere like that. Some people are calling for December, but until we see the code freeze, I don't think it's going to happen. And I don't see a code freeze. Hang on, let's do some research. Ethereum code freeze. Have we done it? Nope, 2017, 2019, 2019. Like, have we locked in the current chain for no more changes to prepare for our transition into the merge or the proof of stake? I have not seen that, and I really need to be checking a number of websites, and I forgot it. I'll go check on it's on my laptop. I have to go and check it. But yeah, there's no code freeze yet. So everybody who's like, yeah, the merge is going to happen this day, you can't predict that because the code freeze hasn't happened yet. When the code freeze happen, I think it's going to be about 2 months, 2 to 3 months. So whenever we hear about the code freeze, if you watch Tim Biko, other devs, and other people, colleagues in the space, Son of a Tech does really good coverage on it. Speaking of which, she's in here. What's up, son? Blind run. So once you see that, that's when we can start the clock. Like, okay, all right, so 2 to 3 months, somewhere in there is when we're going to happen. So continue to mine it until it swaps over. All right, let's see here. For ETH question, as an investor, yes, because the proof of stake will bring in institutions and follow the big money works for trading, but fundamentally bad. For ETH, the question. Yeah, and see that I think that's one of the reasons why ETH is not blowing up as much as it is right now. Like it could be even higher in the fiat evaluation. But I think some of the big money is literally waiting. The whales that we were just talking about is waiting because they don't want the miners to reap the rewards. They don't want miners on ETH at all. They don't want miners to receive the gains that would happen if Ethereum were to pump. So they're waiting for the merge. And once the merge happens, that's when I believe you might see a $7,000 ETH, a $10,000 ETH. And that's just my personal opinion, not financial advice. But I really do believe they're waiting for after the merge to implement this so that way miners won't gobble up the whatever benefit. They're basically we're the ex-girlfriend. They got a new girl. They want to kick us out before they go buying a new house, buying a new car, buying all this for the new girlfriend. They want us out of the picture before they get to have the real party. That's just my opinion. So, anyways. Son of a Tech doesn't care about ETH. Yeah. That one. All right. So, I know it's 10 minutes early, but wait, fully electric. No code freeze or whatever. Keep in mind that they may be running a shadow merge software that can be simply valid point. So fully electric says keep in mind that they could be running a shadow merge software that can simply be switched up. I know they've been making progress on the testnet. Shadow merge software. I'm gonna do some research. I'm gonna poke at some people. I'm gonna do some research. Blind run. Keep me posted privately if you hear anything, any whispers, so to speak. Because I still want to have our meeting prior to the merge. I still really want to have that meeting, but we don't have a definitive like, okay, the merge is really gonna happen on this date. So we'll have to see how things pan out. BBT is Mr. Carter is who I've been in communication with. Very knowledgeable guy, respected in the industry, like Blind Run or Son of a Tech. I know BBT stated that code freeze, but that hasn't mean that's how it will happen. I think the real issues are with the clients, not the core back end. Thus, I truly don't think they're there. I think I really don't think it's a shadow merge per se, but I can say that there's a number of politics that are being played, and this is why Vitalik's having a hard problem. And when he was asked a question of when the merge might happen, he didn't have a definitive answer. There's some politicking going on in the Ethereum like leadership thing, whatever. I'm not sure. Like, Bitcoin doesn't have a leader, but Vitalik is looked at as the father, and then you have the Ethereum Foundation. And there's some back and forth happening in the Ethereum Foundation between devs, venture capitalists, investors, stuff like that it's not aligned. So until they get that kind of squashed and kind of resolved, I don't think they're going to move forward. I think they will happen soon. I just think they got some fine tuning to do, some tweaks to do. But I will see. I don't think. To do a shadow merge, first off, the companies they work with, like the ASIC manufacturers who continue to build ASICs after we talked about EIP 1559 and the merge and stuff like that, and they were super excited to continue to build ASICs, and we're like, why are they happy? Why are they, if they're not going to be able to mine Ethereum, why are they continuing to build ASICs? Why are they happy though? Because we had a feeling that there was going to be an extended period in which they could still sell those ASICs at a profit, mine some Ethereum, whatever it may be. Who knows? That company that builds and sells those ASICs has plenty of ETH that they become validators and still make money back on whatever they sell. So taking into account the body language, the words that have been said, the communications that I've heard, it's going to be something like, hey, it's going to be public. They may be working on things on a test net in the background. I wouldn't call it in the shadow, but we'll probably hear about it, just not before everybody else. So industry leaders, venture capitalists, investors, the ASIC companies that make Ethereum miners will know when the merge is planned before we will. The key is to know somebody who knows somebody. And that's where content creators can have a little bit of an edge. And as soon as I know information, I will obviously post about it on Twitter, so make sure to follow me there. As soon as Blind Run has, it's not information that we speculate on. We try to get information that's actual. The hard part is everybody lies. So you gotta separate fact from fiction. I know Bitsby Trippin or Carter would post or create content about it. So just keep an eye on some of your trusted content creators to provide you information as you move forward with the merge. I think it's going to happen this year, but it may get delayed past the date, the original date or time frame they provided. That's all I'm saying. It may get delayed past the time frame that they originally said. I'm looking August, September, October, somewhere in there. I know that's a wide, that's like Comcast hours, We'll be there between 8 a.m. and 6 p.m. But I don't have definitive proof, facts, data yet. As soon as I get some data, I will. So anyways, let's see here. The shadow is a theory. The shadow is a theory in that testing a merge on a public chain. And when fees are low, it's because it's actually on Beacon. And when they go back up, it's on the OG chain, right? So right now, Son of a Tech, the fees for Ethereum are, well, actually, we should probably go to, so this says $5.37. Let's go to Etherscan. 59 gray, 60 gray, 61 gray. We'll see how things go. Well, I look forward to your content. As always, Blind Run, I'll see you later, brother. I'm going to get out of here, guys. I thank you so much for hanging out, watching. Pretty much that is the end of the stream. Remember, articles are posted in the description if you're interested. Make sure to follow Son of a Tech on Twitter and their channel. I'm sure most of you that are watching me do because I see it in the YouTube thing. Plus, Carter from Bitsby Trippin', very knowledgeable guys, tries to get you the best information with facts and data provided. I try to do the same. Sometimes I'm wrong, sometimes I'm inaccurate or I've been led astray, but I always come back with any updates or information that can correct that. But yeah, pretty much this is if you're new, this is a live stream that I do weekly every Saturday, or try to. So far I've been consistent, but sometimes I gotta get some personal matters taken care of. So make sure to follow me on Twitter. Make sure you get subscribed. And do me a favor on the way out, hit the like button. Make sure to check out some links in the description. That helps support the channel, like the dogelord.com, where you can get some sweet SerpentX merch and much more. Check out Dogelord Coffee if you're needing some coffee. There's some pretty unique brands or names and blends there. But yeah, you always take care of yourself. Take care of you, your family, wherever you are. Be safe. Keep supporting the individual, right? The grassroots, the at-home, the end user. Those are the people I care about. So take care of one another, and I will catch you in the next one. Bye.